the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Taiwan accusing China of illegally poaching talent from its tech firms. We dig into the trade tensions.
An X goes dark in Brazil. Judges confirming a countrywide suspension on the platform formerly known as Twitter.
And short sellers are circling some of AI's biggest question marks as earnings season, it marches on. Analysis coming up, but first, a check-in on the pressure on the markets. It is a risk-off day to kick off September. It is a month that generally is harder work if you're long stocks, but certainly on the Nasdaq 100, we're off by 2.3%. Ed, it is the worst day since the beginning of August, and you're looking at the reasons why.
Yeah, there's a lot of downward pressure on the chip sector. In fact, that's probably an understatement. The SOX down 6%, its biggest drop since August 1st, and that name there is a big reason why. Nvidia down 8%, on track intraday for its biggest drop in about a month, although actually at times in the session its biggest drop since April. There isn't really a clear catalyst. There may be some hangover from earnings. Ian King and I writing about how Jensen Huang's often resounding message didn't quite get through last week, but maybe there's some macro things going on here. We also have chip earnings to come, Caro.
We do, and let's just look broader for a moment, Ed, in the world of chips, and to one Ian King to help us, because Taiwan says Chinese chip companies are, quote, illegally poaching talent and trade secrets, underscoring a heated global rivalry that is developing the key technology used in phones, in cars, in AI. Let's bring in Ian King. And look, perhaps unsurprising, the tit for tat continues. What did you make of it?
Yeah, I mean, this is a recurring theme. We've seen US companies kind of dragged into this, and the biggest concern is this island is obviously a huge concentration of talent, very important talent in this industry. If you can't get the equipment, like a lot of the Chinese companies can't these days because of US trade sanctions, maybe they can get the expertise and build their own, and that is a continuing concern. So you're seeing companies like Naura in China, an equivalent of Applied Materials, being accused.
The Naura case study outlined is that Naura supplies China's biggest chip maker or contract manufacturer, which is Semiconductor Manufacturing International, or SMIC, or SMIC.
Yeah.
Extrapolate on that case study why this would be of particular grievance to Taiwan.
Yeah, I mean, it's a way around their strengths, because SMIC is obviously a massive, well, a would-be competitor to TSMC. It's probably the best Chinese contract manufacturer. So what Taiwan really doesn't want is an erosion of its own talent base flowing into mainland China, and this is obviously a concern for the US as well.
Well, that bigger concern for the US, it's labeled as being China's potential access to technology that would give them an advantage from the military context. Is that kind of the core of US policy around this?
It is. I mean, that's what it all started with under the Trump administration. The argument is that we need to stop China from getting access to advanced semiconductors because of what it will do for its military capabilities. But obviously since then it's flowed into other areas and made this a real focus of economic competition between the two countries.
And not just two countries embroiled, Ian, because the US is leaning on others.
Yeah, no, you're absolutely right, Caroline. What we've discovered along the way, and it's been a long 2 or 3 years, is that unless Japan, unless the Netherlands in the form of ASML restrict access to China of their key technologies, then perhaps there are workarounds. There are workarounds that China can make, and obviously what we're seeing with this Taiwanese situation is another attempt at a workaround. And if you're Chinese, it's a legitimate thing to do. They want the technology for their economy. But obviously from the Western perspective, this is a worrying development.
Bloomberg's Ian King, thank you very much. Now, with Taiwan's growing dominance in advanced chips, Bloomberg News took a deep dive into how the boom in that sector is affecting its economy more broadly. Have a listen.
Taiwan is the home of our treasured partners. This is, in fact, where everything NVIDIA does begins
It's become a linchpin of the global economy. Taiwan's dominance in advanced chips has grown through the AI boom, creating fortunes in the process. Local industry billionaires are 90% richer since the introduction of ChatGPT in November 2022, while stocks in Taipei have surged. Property prices hit a record high in March, with the biggest gains in the city of Hsinchu, the home of semiconductor giant TSMC. That wealth boom is raising fears some will be left behind.
There is a worsening of income distribution across the board, and I don't see any measure to improve this at the current juncture. Parents take the brunt by helping their kids, buying apartments and so on, but it's not sustainable because the next generation won't be able to do this.
Taiwan's government, though, has set ambitious growth goals, seeking a $1 trillion economy by 2028, with GDP per capita set to surpass that of South Korea next year. Annabelle Drulers, Bloomberg News.
Now more on geopolitics. China's top EV maker, BYD, says it won't announce a major plant investment in Mexico until at least after the US election. It's all according to sources. This as shifting American policy forces global businesses into wait-and-see mode. Let's get the technology investors' reaction. Anna Rathman's with us, CIO of CBIS Investment Advisory Services. This is a theme, Anna. More companies feeling a lack of clarity from the US right now.
Yes, it's a bit unusual to be this far into the election cycle with the election actually just around the corner, especially if you count voting not at the booth, early voting, to not have any clarity on the economic policies. And certainly our partners outside of the U.S. Are nervous, just as we may be here.
Let's talk about what you've been seeing domestically. There is a lack of clarity because the election has not happened, but the policy leanings that we're hearing, for example, from now the Democratic ticket, are you feeling that companies, are you yourself as an investor changing how you look at companies based on US wanting, well, more geopolitical tension with China, not less?
Well, you know, China, I think, is a special topic. I think it's party agnostic. I think that's one topic that Washington can agree on, is being a bit hawkish toward China. And it has been this way for many years. So, you know, when companies like BYD say that they want to wait until election is over, I wonder to myself if some of that is just the company saying that the election itself is a bit of an uncertainty for the markets, or if it truly is, it believes that there's going to be a policy difference, because from where I sit, I don't think there is. Both the Democratic Party, certainly it wasn't Harris at the time, it was President Biden, as well as the Trump campaign, they've both been very hawkish, especially on EVs that may be coming over from Mexico. So I think this is more noise than it is actually something that could be solidified into one party versus another being favorable to BYD or any other companies.
Anna, you see that the China issue is bipartisan, difficult, but is there a clear pro-tech policy platform or pro-tech investment for either outcome of this presidential election in the US?
And I think that's the hard part, is that we don't know. It's the hard part. There is some policy generalities that we've heard of from actually both parties, but there aren't any specifics that could make investors say, okay, this is pro-tech. If anything, I think there's increased pressure on tech with AI and certainly chips, right? AI enabling chips. There's a lot of national security concerns, and we've seen this in the last few years. This is not anything new, and I don't think it's going to be something that's going to be new after this election is over.
In markets, there is seldom just one single headwind nor tailwind at any one time. There are multiple. Which is the greater focus for you right now, central bank policy or November?
For us right now, it is definitely central bank policy. Because there's so much uncertainty, there's a lot of noise we're trying to ignore. The Fed, I think, is more on the closer docket, especially with the September rate cuts that the markets seem to be expecting. We are definitely expecting it. We've never been in the 50 basis point camp. We're still in the 25 basis point camp. But we think that could be a start of a cycle. 25 basis points isn't that big. big. So, it's not going to make or break a company that needs to borrow. But certainly a cycle would be a signal to the markets. And that could be the tide that lifts all boats. Tech certainly, but not just tech, but other areas of the market that have been suppressed for about 18 months now.
Anna, all boats are not rising today. In fact, they're all falling, but chips the hardest. Do you invest in AI and chips at this moment?
I think that depends on your time frame. If you're a long-term investor like us, chips definitely has a place because this AI thing is not over. It is not a hype. It needs to get cleaned up over time. But if you're a long-term investor, that's the infrastructure. That is at the center of how you develop AI. So I think it can be an exciting, it might be a buying opportunity, but certainly for the long term.
Anna, there is anxiety in the market this morning. We're showing it on the screen. Were you left from NVIDIA's earnings with confidence, or are you still looking for more data on how long this investment cycle has to run?
Certainly more data, but I wasn't pessimistic about it. Look, I mean, they beat. Right? It was just not good enough for the markets. That tells you more about the valuations of the markets than about the company itself. So we're not pessimistic, but at the same time, you sort of wonder, how long does this have to go, right? And they have great market share right now, but when do the companies like Facebook and other companies that they rely on for their revenues say enough is enough? And that is the uncertainty that I think is coming down the line, maybe in 2025, 2026.
Anna Raffman, CIO of CBIZ Investment Advisory Services. Thank you very much. So coming up on the show, Brazilian judges ruling against Musk, upholding a nationwide ban against his social media platform X. We have the reports from the ground next. And take a look at Intel, Kara. Investors are basically bracing for more information. The chip makers presenting at the Citi Global Technology Conference tomorrow, and the options market pricing in a swing of around 5% in either direction on whatever's said. Reminder, last week, Bloomberg reported that Intel's asked its bankers to find strategic options like separating out its foundry business. The stock caught up with the chip slump, down more than 6% in the session. We'll be right back. This is Bloomberg Technology.
Quick check on the markets for you because we are in sell-off mode once again. As we were on August the 1st, we are down significantly on the NASDAQ and indeed across some key chip players. We are wiping off $190 billion in market cap from NVIDIA at the moment, the worst day since August the 1st. Broadcom has its earnings. All eyes were down more than 4.5%. Apple off by more than let's call it almost 2%. But pressure across the market. We will keep you attuned to it. But let's dig into some individual stories for you in the technology world. And Brazil's Supreme Court upheld an order to ban Elon Musk's social network, X, as part of efforts to combat fake news and hate speech. Now, Brazil joins China, Russia, North Korea in banning access to certain social networks. Bloomberg's Daniel Cavallo is with us, covering from Brazil. And look, this really is Supreme Court winning out here at the moment, Daniel.
Yes, well, hectic days here in Brazil. Let me tell you how this story started. Since the beginning of the year, Moraes, a justice from the Supreme Court here in Brazil, Alexandre Moraes, has ordered the block of some X accounts that were spreading hate speech, and Musk said he wouldn't comply with this order. So Moraes began to impose fines on X. They didn't pay, so Brazil's justice was looking for who was the legal representative of the company in Brazil. I'm surprised there was nobody in this position. So last week, Justice Moraes said that Twitter would have 24 hours to nominate someone for this position. It didn't happen, so Friday night he ordered the block of X in Brazil.
There are some outstanding questions, Daniel, about one of Elon Musk's other companies, which is SpaceX and its Starlink satellite-based internet service. What are the considerations from the courts around Starlink and what they might do?
Well, Moraes ordered the block of bank accounts of Starlink because as X wasn't paying for the fines that were imposed for the company. Moraes said, okay, so we're going to block the accounts of another company in the country, and it's very controversial here in Brazil because there are two different companies. Yesterday, the panel of the Supreme Court, they confirmed the order to ban X in Brazil, but they didn't discuss the Starlink part of the problem. It's yet to come.
Bloomberg's Daniel Carvalho, thank you very much for some on-the-ground reporting. Another big story we're tracking is in the world of smartphones. Next week, Apple unveils its latest iPhone lineup and other new tech. But only a few hours later, Huawei will do exactly the same for its products, setting the stage for a smartphone feud. Let's discuss with Bloomberg Technology editor Dana Wollman. And in the Technology Reporter Toolkit, events are key. The difference with Huawei is that this is about products largely for the Chinese market. But my goodness, the timing's curious, isn't it?
It is, and normally this is the sort of move that Apple would take, really cheekily scheduling an event right on the heels of a competitor's event. So for Huawei to do that to Apple is almost like Huawei out-appling Apple in this case.
Talking of out-appling, they talk about an epoch-making product. Everyone thinks it's going to be a several times folding phone. How much does that play to the Chinese market for Huawei?
So this would really be building on some tremendous momentum for Huawei. According to IDC data from the most recent quarter, Huawei made it into the top 5 for Chinese smartphone shipments, knocking out Apple, which was quite extraordinary. And so this would really be building on Huawei's success in its home country. And as you say, the device is rumored to have foldable creases in not just one spot, but 2 spots. And that would be a really interesting form factor. It would be a first of its kind that ships to the public. And what that really means in layman's terms is you can get a much bigger, more tablet, laptop-sized screen that can compress compactly when folded into the size of a reasonably sized smartphone.
I've been invited to the Apple event, which is here in California on September 9th. It had been, according to our reporting, September 10th, but you've got the first US presidential debate on the 10th. So it's a chock-a-block calendar. Just recap the Apple side, what we expect from them and what Bloomberg's reporting tells us about the product lineup.
So according to my colleague Mark Gurman, the devices will not physically, in an exterior way, look much different from previous iPhones. And to some consumers, that may come as a disappointment. The iPhone hasn't seen a major redesign since 2020. So a lot of people would think the iPhone is due for something just more striking looking. But indeed, one of the biggest selling points will be the suite of new AI features. And even those, according to Mark, will have a slower rollout than consumers may have liked and possibly even Apple would have preferred.
Dana Wollman, keeping us up to speed. Hewlett-Packard Enterprise, HPE, says it intends to pursue the $4 billion damages claim in London against the estate of the recently deceased British tech tycoon, Mike Lynch. Bloomberg's Jonathan Browning is here with more. This is a controversial and difficult decision, I imagine.
It is, and yet Hewlett-Packard Enterprise, which is the entity that has responsibility for the British case, has said that it intends to pursue this claim to the end. Just to distinguish between the two cases, there was a US criminal case that Mike Lynch was found not guilty in, and then there was the British case in London. And in the London case, Hewlett-Packard sued Mike Lynch and his former chief financial officer over the collapse of Autonomy, the software company, and they found and the judge found that Mike Lynch had fraudulently boosted the value of Autonomy. We are now at the point where we are waiting to see whether those damages can be collected, and HP yesterday said they intend to do so.
It is little more than 1 week since Mike Lynch's body and that of his daughter were recovered from the sunken yacht off the coast of Italy. it's an extraordinary story, Jonathan, but could you just explain kind of procedurally what is happening at the moment with the investigation of what happened and now this legal challenge at the same time?
Yeah, so in Italy, the prosecutor has opened a preliminary inquiry. They are looking at potential manslaughter charges relating to the foundering of this luxury yacht, the Bayesian, that sank in such a short period of time when severe weather struck. And they'll be looking at human error and an all host of other issues. But as you say, it's just a few days since that happened, and then HPE comes out with their own statement that in London they will carry on the case, and lawyers will tell you that in a British case, the claim can fall to the estate in the event of a death, and so in this case. HPE will be pursuing the claim against the estate of Mike Lynch. That is his recently bereaved widow, who was on the boat and managed to escape, as well as his daughter, who wasn't on board.
And as your story says, look, likely to face criticism going ahead with the claim, but Hewlett-Packard Enterprise has its earnings, I hate to bring it back to that, but has its earnings this week. They were likely to face questions, Jonathan, so maybe they're getting ahead of that.
Yes, I think that's probably the likely reason why we know this now, because the simple fact is that the actual court case is still weeks from conclusion.
Bloomberg's Jonathan Browning, thank you very much for your reporting.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
And it is a down day to start this month of September. Post-Labor Day, the jolt comes back. We are risk off. We're just going to move on from this board to what is happening on the NASDAQ more broadly at the moment, because we are off by more than 2% at the moment on the NASDAQ 100. And in large part, it is the chip names that are dragging us lower. I'm looking at a sell-off that means risk aversion, that means money pours into the bond market. 10-year yields come down some 5 basis points. Bitcoin as well suffering from the risk pushback. We're down by 2 percentage points. Move on. The individual movers that I'm having a quick look at for you are some European names. Look, Europe has just closed and we have seen SAP under pressure. Not that much, off by 0.8%. The CTO steps down for some inappropriate behavior, we understand, at a previous role. We see Delivery Hero down by 1.3%. Again, this is a German company, but actually has a Middle Eastern unit that it's looking to, well, maybe IPO in Dubai, and bankers have been talked to. NVIDIA, though, front and center. Ed, we must keep showing this. The fact that the NVIDIA name is down by 7%, worst day since August the 1st. The SOX, nearly every player is on the downside.
Right, and given NVIDIA's market cap or weighting in indexes, it's important. Come back to me on the other mega cap names, though, because it's a similar story. Kind of by association and broad market anxiety, they're the biggest points drag after NVIDIA on the NASDAQ 100 at least. I don't see any news out there. I don't see any catalysts. The lead of the Bloomberg Global Markets wrap is firmly on NVIDIA, but these are notable declines. And of course, we just talked about Apple and its event next week. Probably expect some volatility in the interim. Let's get to one of the top stories on the Bloomberg terminal. Wall Street is getting into shorts as traders hunt for winners and losers in the AI race. Check out Supermicro, Lumen, and Symbiotic. They were hit by bearish research reports questioning their valuations, and the shares, as a result, are getting punished. Bloomberg's Bailey Lipschultz has been writing about this, and fresh in the mind because we covered it so deeply on the show, but Hindenburg's short sellers report on Supermicro is kind of the latest high-profile example. But just explain what you're trying to outline in your piece.
Well, Ed, when you mentioned Supermicro, this is a company that went from just about $2 billion in market cap up to $66 billion in market cap in just about 2 years. So we're seeing a number of these AI beneficiaries, whether it's Supermicro with their business. Symbiotic is a company that makes warehouse automation robots and has a play, or at least they pitch themselves as an AI-related company. Lumen Technologies has seen shares rally over the last few months given their positioning within the AI trade as well. And we're just seeing, to an extent, a number of activist shorts, whether it's Hindenburg, Kerrisdale, and some of the others, just kind of calling out and diving deeper into these companies, into their operations, into what they're actually doing. And that's something that it seems like with these manias, whether it's Bitcoin, whether it's pot stocks or AI, we see Wall Street more than happy to pile into the number of these stocks, a lot of these very good companies, and we've seen that with NVIDIA over the last few years. But when the scrutiny kind of gets ramped up and maybe a risk-off tone like we've seen today, that's when a number of these companies can fall under pressure, and that's really what those short reports have called out. Again, 4 companies, 4 very different reasons for their bearish reports, but nonetheless, each pretty much down more than 20% since those reports were published.
Is anyone willing to buy the dip here? Because actually, Supermicro is on the up today, only but a percentage point.
It's up 1.4%. Again, the concerns from last week, from the Hindenburg report, from the delayed filing, kind of just caused people to rethink and recalibrate some of those bets. Has the company come too fast, too high, too quickly? Again, it was trading north of $625 just a few weeks ago and still only at $446 right now.
We're searching for separating winners and losers is one of the quotes in the story. I think we've dwelled on the losers. Who are the winners out there? Have you been able to find them, Bailey?
Well, we've seen a number of them, Ed, right? Even with NVIDIA's fall off today of 7%, if you bought in really at any point for the most part over the last 2 years, the stock is absolutely ripped. We're still, it seems, and I think you would probably know better than I, it still seems like investors right now are teasing out the picks and shovels, if you will. We see on the private markets, the OpenAI latest funding round, that's a tremendous valuation for a company. So the big concern, at least when I talk to folks, whether it's later stage investors or those growth and crossover investors, is where are you finding that value? And as we see companies stay longer or stay private for longer and raise some pretty eye-popping valuations, that's where people are putting money to work. But we're also still seeing with the Supermicros of the world and the NVIDIAs of the world, AMDs, that there still is a lot of money to be made. The big question is, what is the proper valuation, and when do you, as Carol put it, buy the dip, and how does that kind of fit into a broader portfolio?
Bailey Lipschutz, it's a great story. We thank you. Meanwhile, though, look, a key question still out there for investors is regulation. In California, the legislature has actually approved a controversial AI safety bill late last week, which requires companies to make sure their technology doesn't cause major harm. It now faces its biggest test in front of California Governor Gavin Newsom, who has stated he doesn't want to over-regulate the state's dominant AI sector. The bill has drawn both criticism and praise from a series of national figures. Wendy Gonzalez is with us to discuss this. She is the CEO of SAMA, which provides high-quality training data to power AI technology. And I would have thought you've been doing well as all companies suddenly want to be able to label their data and use large language models. What do you make of this regulation going through California?
So AI can be a force for good, but it does need some safety guards and some guardrails put in place. I think this is really a signal that the unregulated era of AI is over. I think that first step was with the EU Act that happened and was ratified overwhelmingly last year by the majority of the European Union.
The worry for some in the market, OpenAI has been a voice for this, Wendy, is that the regulation coming through will harm in particular smaller companies and also open source large language models. Is that something that you agree with, or is this the necessary step taken to ensure that AI remains for good?
Well, it's a tricky regulation to put in place. There's always this balance of ensuring that we're not stifling innovation while trying to reduce harm and to create transparency in AI. Within the SB 1047 regulation itself, there are some parameters related to the amount invested in AI. So they're trying to find a little bit of a balance of if it is a large-scale model that has over 100 million of investment or $10 million to deploy, that is what would be subject to this, as well as AI that could be used to enable cyber attacks to critical infrastructure such as energy, nuclear, chemicals, as an example. So it's a balance.
Wendy, we spoke to academics who said they were consulted but didn't like the content of the bill. We spoke to Senator Scott Wiener, who said he spoke to everyone he could and tried to get input from as many people as possible. And then you have Meta that's against it from the open source perspective. Why couldn't we find a bill that basically worked for a broad coalition, given all the talk about it?
It's true that it is somewhat incomplete. I think one of the best things that can be done is that public-private partnership where, companies like Meta, OpenAI, and others are really on the leading edge of developing this technology. And I think there were a few things that were basically incomplete in this. One was that there, is the notion of kill switches. The other is this notion of having third parties test. Well, that becomes really difficult for proprietary AI. Right, you're opening yourself up to a third party, and that's a reason why companies may not want to participate. Then there's some other important items like sandboxes. So in AI, research and development is a critical part of this. If we don't have some content around how sandboxes can be leveraged to test out, whether there are actual harms, I think it could become very challenging. So really, at the end of the day, what I think everybody's voicing some concern on is we don't want to have any unintended consequences, whether it is IP, stifling of innovation. At the same time, I think we could all agree, and most Californians probably do agree, that some safeguards for this pervasive technology are necessary.
Wendy, SAMA provides data labeling and evaluates models. How is the bill and its contents going to impact you in practice?
Well, one of the most critical things about developing responsible AI is having some human-centric validation. So I believe that this will ultimately drive forward some additional measures for both human-centric validation, quality management systems. So I think there could be an increase ultimately over time. But what we do see is that a lot of companies, including big tech, probably do a little bit more than maybe the public is aware of in terms of trying to provide these safeguards. Now it's really about putting forth a regulation that balances that and really creates some transparency. So we've seen it happen before, certainly whether it was green emission standards set up by California or laws like GDPR in Europe, where they did set forth a wave of actions that ultimately companies had to comply with. So while I wouldn't say it, we're seeing it in droves right now, I do think over time companies are going to need to think about this because, as I mentioned before, I think the unregulated era is coming to an end.
Wendy Gonzalez, great to have some time with you, CEO of SAMA. Now we want to stick on the theme of AI, but the sell-off theme that we're currently seeing in the markets. Ed, this is deja vu of the start of August all over again. We're down by 2% on the NASDAQ 100. We're looking at NVIDIA being the biggest points drag once again, obviously when it's worth so much. $200 billion being wiped off in one day alone in its market cap.
At least in the first week of August, there was something to point towards, right? The unwinding of the yen carry trade, central banks. There just seems to be a lot of anxiety for no specific reason or catalyst in the market. And the global wrap on the Bloomberg points out that, like you said, Caro, August and September, historically pretty tough.
Yeah.
Chip makers are doing badly, but there are other sectors at play, like the energy sector. I don't know where else we could look.
Yeah, oil down sub $75 if you're looking at Brent, but it's notable that T. Rowe have come out, a particular fund manager there, saying, look, I am worried once again about a yen shock, seeing another one coming. Maybe it is the same root cause of anxieties that we saw, and September always being a pretty tough month if you're long equities. We're going to stick on this theme throughout, but coming up, another busy slate of earnings with AI in focus there too. We're looking ahead to results from Broadcom, from HP Enterprise. That conversation up next. This is Bloomberg Technology.
Okay, time for talking tech. And first up in the news, DirecTV says customers lost access to Walt Disney programming today after the companies failed to reach a new licensing pact. The company also says Disney sought a waiver to all claims that its behavior is anti-competitive as part of any new deal. Plus, South Korean startup Rebellions is planning to go public as early as the end of 2025, seeking to capitalize on booming demand for the chips used to power generative AI. It plans to select global banks for a domestic listing around March. And Airbnb is urging New York City officials to scale back a local regulation that outlawed most of its short-term rental listings when it came into effect nearly a year ago, citing impacts on travelers and hosts. The company says the regulation has, quote, failed to deliver on the promise to combat the housing crisis. Caroline.
And let's just return our attention to earnings, because there are still some to come, believe it or not. HPE and Broadcom set to reveal actually pretty healthy growth in quarterly reports this week that will also be sifted for clues on the longevity of pretty heavy corporate spending on AI. Let's break it all down. Bloomberg Intelligence analyst Mandeep Singh. I'm going to start with Broadcom. The market is anxious today. It seems to be a report coming from the Semiconductor Industry Association showing below seasonal trends. But what will we dissect from Broadcom more broadly?
Look, they are a pretty diversified company. And when you look at their two main segments, the software side is recurring in nature. They tend to focus a lot more on cybersecurity. And as we know from the CrowdStrike outage, cybersecurity spending actually has done pretty well. And in fact, our survey suggests there should be an uptick as a result of that outage. On the semiconductor side, look, every hyperscaler has told us they are over-investing right now in AI infrastructure buildup. And granted, 60% of the dollars are going to NVIDIA, but the remainder, I would say, Broadcom, Marvell, we saw the print from Marvell was pretty strong, because all these hyperscalers are focusing on custom chips. I mean, at the end of the day, whether it's Amazon or Google, they want to do their in-house chips, as well as a lot of the enterprises that are focused on compliance aspects of Gen AI. They don't want to build everything on the cloud. So to my mind, a company like Broadcom that's giving you all the, the basic infrastructure you need, whether it's on the networking side or the custom chip development, they should benefit from the trend and the CapEx spend we are seeing.
And Broadcom may not say it explicitly, but Broadcom helps Google with its TPU. What about Hewlett-Packard Enterprise? It's kind of like at this stage in earnings season, historically it might have been hard to get yourself kind of pumped up for this, Mandeep. But look at the anxiety in the market. It's another print we need to watch.
Well, so I look at it this way. All the companies that require, AI-ready servers, there aren't many places they can go to. It's Dell, SMCI, albeit all the things that happened, with their 10K filing, but and HPE. And I think all these companies have razor-thin margins when it comes to the AI servers, but still it's the growing part of their business. And right now we have heard from every semiconductor maker that, the market is undersupplied. And that's why, whether you're a server company or chip company, you still ride this trend. Now, what, the new Blackwell release will do, who knows? But clearly, we know for a fact that all these companies are looking to build their AI infrastructure. And I think because these companies fit in the supply chain, they should benefit from that trend.
There's been much said of bulls versus bears. Now, some of the bearish line of argument is just valuation.
Yeah.
Mandeep, what do you make of some of these valuations on these companies?
No, look, I think with NVIDIA, you could argue the multiple is rich, but can you find another company that's growing sales at 50% plus? And so that's where, as long as they keep beating and raising the way they have, it's hard to be bearish on valuation. At the same time, there is a risk that when the growth tapers, and it will taper, everyone expects that. It's a question of when it will happen, and when that happens, the multiple will be cut into half or even more. So right now we are in that phase where nobody knows how these LLMs will keep scaling. There will be a plateau in terms of, the scaling for the LLMs, but we haven't hit that yet. And the market will look ahead. It will look 12 to 18 months ahead. But right now, the bet is it's not 12 to 18 months ahead. It's probably a little further along. And I think until then, the valuation is sustainable because with tech, you pay a premium for growth. Yeah. And these are the growth pockets within that tech sector.
Mandeep, real quick, if capital expenditures was the watchword for the hyperscalers, which metric do you watch for those other names left to report?
Well, so look, I think when it comes to Broadcom or HP, Broadcom is more diversified, but top-line growth is what you care about, and gross margins. With NVIDIA, what everyone was scared about was that peak in gross margins. So with Broadcom, if we hear a similar story, then that's when you get worried because gross margins are very important for hardware companies.
Bloomberg Intelligence senior analyst Mandeep Singh, thank you very much.
Fans of Oasis, they're looking back in anger. You get it? at Ticketmaster, thanks to prices skyrocketing for the group's highly anticipated reunion tour. Now, the ticket platform was using dynamic pricing to set ticket prices, which of course adjusts prices based on real-time demand from the market. Prices jumped by multiples when tickets went on sale, prompting hundreds of complaints to advertising regulators. Bloomberg's Charlie Wells joins us now. You are the voice when it comes to personal finance, and you'd been bracing for this, people playing the system ahead of it, Charlie.
Oh, yes, I have. I have been covering this story since last week. I've been talking to fans up and down the UK, and it's striking how the energy has changed from last week when there was a sense of jubilation. I was talking to fans who were willing to do anything to get their hands on these tickets, to frustration this week, those same fans unable to get them due to some tech issues, and of course, some of those dynamic pricing issues as well.
That frustration is playing out on Instagram, X, formerly known as Twitter. I literally see Liam and Noel Gallagher's faces everywhere, which makes me think about technology. Is there nothing that they could have done from a tech perspective to stop this, or is tech to blame?
That's a really interesting question. I mean, on one hand, there's a sort of communications and marketing side to this where, you know, dynamic pricing is newer here in the UK than it is in the US as far as concerts. But when you think about things like Uber, of course, there's surge pricing here. So there's an argument that the band or that Ticketmaster could have been clear that this was going to happen. But I've actually been talking to a number of fans, you know, after the weekend, and they said that some tech glitches were actually almost more frustrating. So when Nikki Bentley here in Essex said that she was accused of being a bot by the website. And then I also spoke with someone in Brighton, Rob Harlow, and he said he made it to the front of that digital queue, but by the time he got there, he was then kicked out and ended up at number 250,000 in line. So a mix of that kind of communications issue, but also some tech glitches here.
Bloomberg's Charlie Wells all over this story for a little while. Thank you very much. Caro, we go straight to markets. We have to. I don't know where to look other than at the index level. NASDAQ 100 tech is under pressure. That's an understatement. Nvidia is the problem at the index level from a points drag perspective. But when you see a name like Apple down more than 2%, then you start to ask, okay, what's the bigger thing that's happening here? And it's probably the chips, right?
And Ed, we are in back to school mode. We've got volumes actually higher when compared to previous sell-offs at the moment. We're up some 7% in volumes on the NASDAQ. And you're so right. It is chips and chips again. We're down by 7% on Nvidia. The broad semiconductor index is under pressure. I think only one name was in the green. We're seeing by 5.8%. We're off of our lows on the day, Ed. But it's important that we look ahead to Broadcom in terms of its earnings.
Yeah, and Intel speaking tomorrow at that City conference as well.
That does it for this edition of Bloomberg Technology.
Short a week, but my goodness, a lot to talk about and recap. You know the podcast. You find it on Apple, Spotify, the Bloomberg platforms. Buckle up. I think it's going to be a busy one. This is Bloomberg Technology.